Tax law season. It's when we reflect on the last year and see where we misled ourselves into thinking we were smart. Only to be reminded that while we do our best to stay disciplined, we all make mistakes, we are all human, and we all got to learn. Welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, stocks, and the economy. I'm your host, Arlen Hansen. Today, I'm joined by Brian Leni, editor of the Junior Stock Review, an investment newsletter helping readers find the information and navigate the risky junior resource market. He was a panelist at our most recent Kinvestor Days conference, and I wanted to pick his brain a little bit more. This interview is not investment advice. It is for your listening pleasure only. I asked Brian specifically not to discuss any of my clients or any stocks in my portfolio, so you can be assured that I have zero financial interest in any of the companies he mentions. We are not tax attorneys, investment advisors, or legal advisors. This is for general education and entertainment purposes only. This is not investment advice. Do your own due diligence, please. If you like this video, give me a hit of dopamine and tap that like and share button. Sharing is caring, and I love it. All right, Brian, thanks for joining me today. How you doing?
Good. How are you?
Good. And your village is good? All your 100 children?
That's right. Very good. Very good. Very good. Yeah.
Yeah, right on, right on. We're doing a little something different today, and we talk about tax law selling. But before we dive into this, can you give a little bit of background on yourself, how you got into this crazy business?
Sure. So I'm an engineer by trade. I worked about 10 years in the steel manufacturing business out of school, process engineer on the floor. And then I got or took a so-called promotion into management. And so I was a manager in the rolling process. And I didn't really enjoy it. And I think that sort of coincided with my interest in junior mining stocks or precious metals, really to start, and then the juniors. And in 2013, I sold my house. It was a pretty drastic change to take. I had the full support of my wife, two young kids at the time, and we moved into a rental. I took 2/3 of that equity and deployed it into the best juniors, or the ones I thought were the best. And by a stroke of luck, I turned out to be fairly right. I would say about a good five or six of those would probably be at the top of the list in 2016 that turned. And my portfolio went up around 300%. And again, with the grace of my wife, I left my career in steel manufacturing to pursue investing full time. And so I'm going into my ninth year as an independent investor in the sector. And it just so happens I started writing about what I invest in 2020.
That's cool. I love the fact that you're chasing what you wanted to do
Mm.
and decided to let the universe catch you. That's a huge change, right? So like
Oh,
a huge change. So good on you.
yeah. Honestly, it's even looking back on it, I didn't really come to grips with how big of a change and the risk I was actually taking when I took it. And I think, that expression, ignorance is bliss. Man, is it ever? And so, if I knew what I knew now, I probably wouldn't have taken the risk back then, like in the contrast of
hmm
what I actually didn't know. But I was able to pick some good companies, and then I was able to make that huge step to leave a very good career. Like I was making great money, to going into a sector that is very much cyclical, and
Yeah,
there's
yeah.
more bad years than there are good. And so it was quite the change, but it's one that's outside of having kids and marrying my wife, the best change or decision I've made.
Yeah, you look happy. That's awesome. That's awesome. As we talked about earlier, and you just brought up how cyclical this market is. Well, it's cyclical on a year-to-year basis too, and a month-to-month and a week-to-week. So we're going to talk a little bit about the cycle of tax loss selling. It's the end of the year, so it's a season that they call tax loss season, which is interesting because we can really tax loss sell all year long if we want, but it
Right.
just seems to be a lot of attention at this time of year. Right. So let's dumb it down first. What exactly is tax loss selling and why does it incentivize the sellers?
So for a lot of people, funds and individuals that have positions that are sitting at a loss from wherever they started at the beginning of the year, can sell before the end of the year and take that loss against their income, for their taxes that year. So hence the tax loss selling. The incentive to do it probably prior to the very end of the year is you could actually, after 30 days, buy the position back. So if you like the company, you think that there's still a lot of good things ahead for it, catalysts for that share price to move. You can sell it in November or mid-November, and you can buy it back mid-December, end of December, and like nothing happened, and still take the tax loss And then hopefully you're right about the share price going up and kind of get that swing. And that's why we're probably getting close to about mid-December, or we are getting close to mid-December, and we're probably on the cusp of maybe things changing in terms of the direction of share prices. Uh, which I've been able to see, each year that I've been doing this. There seems to be at least some portion of the sector that has sold off and is looking to bounce back. And this year it may not be as much in the precious metal, but everything else that hasn't quite had the year that precious metals had might be where the opportunity is.
Yeah, I was actually eager to bring that up. Like, you think the smart money is tax loss selling earlier in the year,
Yeah.
right? When generally speaking, stocks are trading at higher valuations and have better liquidity, and buying back now when it feels like people are puking out their positions. And do you think that final puke out is happened now, or do you think that you see that final puke out in the last couple of weeks? Because to puke out to me means large positions puking out. How many puke out positions does the retail market have left over the next couple of weeks?
Yeah, well, first I'll comment on the point that you make. I think what happens is a lot of people, they're human, and they are a lot of them are very positive about the future, or they project the immediate past. But a lot, I think, they think the share price is still going to recover, and I'd rather hold it as long as possible. Maybe that drill hole or something that's going to save it before I have to blow that position out. And I think that's what happens is people hold, and they're like, oh my God, I got to get rid of it. Especially in this case, Trump gets elected. And then the market's like, oh, this is the perfect excuse to blow out shares. And so, that's sort of where we sit. In terms of, are we at that puke point? I would say the last couple of weeks in November after Trump's election, and then maybe last week, it was pretty bad. Like, I think it's some of the positions that I was looking at in terms of tax loss selling probably hit that capitulation point.
Hmm. Hmm.
But you never really know. And
We don't know tomorrow, do we?
the only thing I would say is that if you look where Christmas and New Year's lies this year, I would say that next week is more important than it's been maybe in years past, that sort of third week of December. And so
Hmm.
if it's not this week, it'll be next week that I think if there's going to be a recovery, that's when I would look to, maybe deploy cash, or maybe deploy cash this week in hopes that next week is where it upticks before the end of the year.
Yeah. Well, I know you didn't see my questions before we came on here, but you're answering them already. My next question was, why do you think investors wait until the last minute to sell?
Sorry.
And that's a fear and greed question, right?
Totally.
Like,
And
we are human, and we are, oh my God, maybe I can just get a little bit more, maybe, and then finally you're like, oh my God, I just got to get rid of it,
yeah,
right? And that's where I think the opportunity for the buy side is.
for sure. And you know what, I think it's also like anybody who's listening to this, I don't think everybody, it doesn't matter where you are on the spectrum of investors, everybody sort of has this issue that we are human and we're very emotional. So I think the biggest point is that you think about it and just realize that's how you act. And if you can rationalize it and be more proactive in realizing what you're feeling, and the more logical approach, then you can sort of avoid these situations that the crowd is piling onto, and that's on both sides, on the buy and the sell. Where they to be contrarian, you do have to buy when everybody else is selling, and vice versa. And I think people they hear it, but it doesn't really sink in. And I think the biggest difference between that separates probably the higher end investor or the more successful investor is that they're able to absorb that and realize in the moment what's going on and why they're acting as they are, and they can sort of minimize that effect of FOMO, or whatever you want to call it.
Yeah, I think we can all analyze assets. Well, not all of us, but a lot of us can analyze assets. But if we can't get a hold and understand our fear and greed and how that market works, I think we're in a lot of trouble, right?
Definitely.
Because you're selling at the bottom because you're fearful, and you're buying at the top because you're greedy. And
Yeah,
we're all humans, and we're all run by fear and greed.
that's
Period.
right.
Anyway, that's my position, right? Whether you guys agree with it or not, who knows? I don't care. I read a lot of James Dine's Mass Psychology. Like, that was one of my favorite books, and when it
Yeah.
came to investing, and he talked a lot about like the mass psychology, fear and greed, and it's just like, into my opinion, it's just so true. Do you look at the tax loss season as like a short-term opportunity, trading opportunity, or more of a long, like a time to build the long-term positions that you really, really believe in? A mix of both, or where do you stand there?
It's both for me. And usually for me, I'm able to take losses earlier in the year and sort of take them when I think they should be taken rather than wait. That's definitely something that I've learned to do. So for me, it's usually opportunistic where and that if you look right now, the newsletter, there was 4 or 5 companies that I've had outlined that are already in the portfolio, and I thought to myself, if I can get a good price on these, I'm definitely going to pounce. And those are longer term positions. Then there's other stuff I do, and it's really for my amusement too. Is different trades that I see happening with companies that I'm not quite willing to have a long-term position in, but I'm interested enough that I follow their news flow and see an opportunity to maybe flip, make 10, 15, 20%, not be greedy on it and in and out. So it is definitely both for me.
Yeah, yeah. Um, and then how often are you rebalancing your positions? Like, do
Uh,
you think this is a particularly good time to look at rebalancing positions? Because if we're getting this fear and greed and this market capitulation, right? So maybe the market isn't truly being valued what it's worth, but based on the fear and greed. Is that make it a good time to start really looking at?
it could. Honestly, I was rebalancing during that wave in Q2 and then sort of that wave in Q3 where I took profits as I was making them and they were being flipped into parts of the portfolio that were underperforming. And that's sort of how I've always worked is basically I take what the market gives me at that moment and not try to get too cute about prognosticating what's ahead. If mistakes I've made have been in that sort of ilk where I'm like, oh, you know what, I think the market's going to do this or that, and probably about 2/3 of the time I'm wrong. And so it's not that I still, again, that I still don't do that, but I don't do it as often as I did before. And I usually take what the market gives me. So if there's 30% there and I see a home for that 30%, I take it. Uh, and it is a totally different mentality. And I think, again, you talk about emotions. I think that a lot of people get too caught up on blue sky, on 10 baggers, on these sorts of things. And then they buy and they hold, and then you ride that roller coaster up and down, up and down, up and down. And the fact is, if you look at any chart, especially you start from a year, go 6 months, 3 months, month by month, day by day, and the chart is like this, meaning even when it's going up, up and down, up and down. So, you can usually buy these things back, especially if you're looking at a spread of 10 or 15% plus or minus. Usually you get that opportunity. You might have to wait a little bit longer, but if you can be patient, it usually comes back to you. And I think that's, again, maybe experience and then sort of being in the moment instead of getting too far ahead of yourself about where stocks might go. But that's sort of how I look at it.
Yeah, so you've made volatility your friend.
Try to, yes.
Yeah, yeah, yeah,
Try
yeah.
to.
A frenemy.
That's right. That's right.
Oh
That's
man,
right.
you brought up the word patience, um, and I think that's like an interesting thing to dive into, right? I think a lot of investors, see immediate wins in this market, right? They look back and go, "Oh, that stock went up like, in 2 days, and it gave me 100%, or it gave that person 100%. Oh, I'm going to buy this stock, and I want the same result." But they don't have the patience to actually let it unfold. Right. So and so now they're holding something that they don't have the patience to hold and they don't believe in, and it's underwater. Now you're losing money. Those are hard stocks to hold on to.
100%. But I think it's one step further back in the root cause there. I think a lot of people do exactly what you just said, but they have no idea what they bought. And so they don't even know how to be patient because they don't know what to be patient for.
Interesting.
And,
Yeah.
and that I think that's like the bigger thing is like I talk to enough people at conferences, I get enough emails, and they're talking about companies, and I'm just reading what they've written as like you have no idea what you bought. And so how do you have a price target if you can't even explain to me what you bought? So, they're looking for that random percentage gain, but based on what? And so, if you look at a company and you actually understand what you bought, you understand how it's going to develop. The market doesn't, and this is the other thing, is the market doesn't always give you value right away. Like there's a lot of stuff, especially those two prior bear market years where good news was sold, meaning the companies are getting better and their stock price is going down, which is not conducive to making profits. And so you have to be patient if you understand what you buy. You're like, oh, this company is only de-risking and getting better. The share price is going down. I need to take this opportunity to buy and be patient because the price target, buying this at $1. It should be $2 with proper valuations at a reasonable metal price. And then so then if you start talking like that, that's when I think, okay, you can be patient, or you should be patient, because you know what's going on. And if it takes 6 months longer, especially these days, the longer I've been an investor, the more patient I've become with the time horizon to make those profits. And this year was the probably shining example where, like, I could name a couple companies, G Mining, Montage Gold, to name two. I bought those a couple of years ago. They took 2 years to kind of come together, and they only got better over time, yet their share price really did just about nothing. And then this year, they both went up, I don't know, 250% and just over 200%. So, you know, I think those are fantastic returns in I would say, in a medium sort of year that 2024 was.
Incredible.
So
Yeah.
those are on the cusp, I think, of going even further with what the companies have on tap. So, you know, I think that patience, if you know what you've bought, I think you that's where you need it. But just realize when you don't understand something, because you can be in a lot of trouble in those cases.
Yeah, like so when you talk about patience, you're talking about patience in your when you start buying it. Like you hear a story, you love it, you just don't go rush out and buy it. You become patient. You get to understand the DNA of the company, understand the assets, watching how the stocks trade. And over the last couple of years, if the more patient you are, probably the more advantageous it was.
Totally.
Right? Like in a bear market, right? For
Yeah,
sure.
yeah.
And then so you're patient in your accumulation and your due diligence and your understanding to get to know the company, and then you were patient in the hold. So my question is, are you patient when it becomes time to sell?
Well, that's again, and that I think depends on how well you know the story and what's actually happening. I
Yeah,
think there's instances where if you like the problem with the junior sector is volume too. So
totally.
that's why you see, like, in the bear market, when people are so scared they want to get out. That's why good news is sold, because it's sold on volume. The good news is bought by those that know what's going on, but then it's sold off because the people that want out are waiting for that volume to come in for them to blow out 10, 20, $30,000. And so that's kind of how it works. And you bring up a good point, patient on the buy, like buying in tranches. Even if you're in sort of this bull market, whatever you want to call this kind of little build up period, because I don't think we're in that full bull market yet. Even being patient in these, because again, if you remember, share prices, they kind of do this, even if they're on the up. So if you're patient and you buy in tranches and you get to the points, especially depending on where you are in the end of the year and what's gone on, maybe you get that opportunity to take a second or a third tranche in these sort of weak moments. And then the other thing is just the risk overall in the market, with war, with the social stuff that goes on in Canada and the States. Like there's so much turmoil and there's so much debt in the system that you also don't want to forget about the risks you're taking just having your money out there, let alone what goes on with the juniors themselves. And so buying in tranches is never a bad thing. I think even in a bull market, the only thing is, I think when you get to those, like, let's say 30, 40,000 plus positions, you probably need a placement or a financing really to take that position on whole. Like if you get that opportunity with a warrant or something like that, then maybe it's worth it. Because you in low volume situations, you can really move a stock up if you're trying to buy in a short period of time.
Yeah. Let's walk through a scenario of buying with patience. So let's say I want to buy 100,000 shares of XYZ company, okay, at $1. Okay. If I decide to buy in tranches and it goes to 95 cents, I should be excited.
Absolutely.
If I buy in tranches and it goes higher, I'm making money and
That's right.
I should be excited.
That's right.
If I become patient and my average cost ends up being $1, then I got what I wanted in the first place.
Yeah.
Right.
100%.
So it kind of makes sense. Right. Yeah. And I think a lot of people hear a story, see a story, get all excited and be like, I'm all in.
Yeah.
And then all the other house of cards falls because of it. Right. Okay. Moving on. A famous quote by Robert Arnott: in investing, what is comfortable is rarely profitable. Why do you think that buying stocks when they are artificially valued because of the cyclical repositioning at this time is so uncomfortable for most? We know this is happening. Like we know this is
Yeah.
happening. But why is it so hard for people to know that this is happening and be comfortable with what's going to happen afterwards?
Yeah, I think there's multiple things that go into that. I think it's probably a part of when you see the crowd moving in a certain direction, you think about, am I right, or are they right? Could this be the end, or should I be taking the money out? So you second guess yourself, and that's what is so hard about being contrarian, because everybody else tells you you're stupid. You shouldn't be in gold and silver. You should be in Bitcoin, or you should be in something like this, and that's where all the attention. That's where everybody's making money. Um, but I think that most people, again, when you start having success over time, you start seeing that the way that you're most successful with the least amount of risk is buying those companies that are selling for less than they're worth, and it's typically at the moment when you don't think that you should buy them that you should be buying them. And
It's
the
so ridiculous, isn't it? But
yeah,
it's time and time and time and time and time again. Right?
yeah,
It's
yeah.
like it's just how it
So
goes.
but the other side to it is, you also have to realize that if you're going to be contrarian, you also have to, again, about patience, but you have to have a long-term outlook. Like, you can't think, oh, I'm buying this, nobody else is interested, I'm contrarian, and then next month think, you know what, I probably need to drop this position. You need to have you need to be able to hold that, probably multiple years, and know that that company is still at the top of the heap in terms of being able to get money, in terms of probably still developing the company and having some sort of news flow, and not go completely off the map with the market. So I think you need to take all those sort of things into account. And it might over time make you more comfortable with making a decision over that. But I can tell you, like, for me, again, I've been an independent investor for 9 years now, and I've definitely had success. It's still very hard for me, in a lot of cases, to do that. So nobody should think that it's absolutely easy, because I don't think it is, to be able, as you say, be able to hold that discomfort, especially if you see people around you making money. You sort of think, oh, that's where I should be, and I think that's only natural. But again, over time, I think you're going to get more comfortable with it and realize that's how you need to play the resource sector.
Takes practice.
That's right.
It takes practice to get comfortable with it, right? And
Yeah.
probably a few dollars lost. All right. So in previous years in Canada, it was a 2 or 3 day settlement for tax loss, and we may not know the answer to this. And if we don't, we'll have to figure it out and get it posted online. But do you know when the last day to sell stocks in Canada for tax loss selling this year is? Is it the 30th or the
I,
31st? Yeah, okay.
I don't know. I don't know. Again,
Let me call it my broker.
you know what? Because
He probably doesn't know either.
yeah, I never wait that long. So I've never
Yeah.
really been in that position.
Yeah, but maybe for the buy side, like maybe that is the puke out day for buy side. I don't know. We'll have to see.
Well,
Every year is different.
yeah, every year is but honestly, I think most years that have showed a turn in December have showed it just before Christmas, where it's like 2, 3, 4 days before Christmas. There's been some sort of turn. Again, it probably depends on what individual companies. Maybe that's part of it. Uh,
Mm.
but yeah, I've never kind of come across that position of wanting to know with the last day
When's
that
the last minute I can sell
yeah,
this stock?
yeah,
Oh, I'm losing
yeah,
sleep.
yeah.
Oh,
Yeah.
good. Last question. Nothing to do with the market, man. Nothing to do with the market whatsoever, but it's really important to me. What brings you joy?
My kids, my family. Not only that, but also I think I'm a little bit introvert, or I am introverted. Hunting over the last month or so has been incredible, and that's something you sort of do on your own. But you also share. Like this morning, we shot 4 deer over the last week in this last part of the gun season, and being with the guys and sharing that was an awesome experience for me. And so yeah, family, my kids on a daily basis, and then those times that where there's some things I like to do myself, and bring me a lot of joy. So hunting is definitely the top.
Yeah, I like hearing that because I think it's important for men to be with men.
That's right. I agree.
Right? No, it's good for our hearts and it's good for our minds. We don't need to be lone wolves in this world.
That's
Right.
right. That's
We
right.
don't. We don't. Awesome. Well, that wraps it up today, Brian. Thanks for joining me in the show. To all my listeners, you can stay up to date with Brian on his social media and his website, juniorstockreview.com. He's got an excellent newsletter. If you haven't already, be sure to join the Kinvestor Network by subscribing to our channel, follow us on social media. And if you liked what we talk about, like the video and comment. I love getting dopamine hits. Sharing is caring. And Brian's an awesome guy. So stay tuned for the next episode. Thanks,
Thanks.
Brian.
Thanks for having me.